Costco announced their earnings after the market closed today, and they showed up with some revenue that was just flat and promised to increase the membership fees to current members. The market isn't completely liking what they heard. The stock's down a little bit in after hours, but for all you know, tomorrow when it starts trading, it'll go up in value. This is Costco. This is a favorite to many investors that have bought Costco and just held the stock, which has been a good idea. Over the past 5 years, this stock has gone up 215%, which is a fantastic rate of return. And the stock over the past year has really worked. It's up 63%. Now, to the naked eye, this is just a retailer. It's a discount retailer. And the naked eye would be correct, but there's just a lot of value and appreciation that investors have in this stock. I'm going to take a look at the stock, evaluate it, and see if it's a good stock for me to consider buying. Right now, I'm not a Costco stockholder. I've never been a Costco stockholder. I've been a Costco member for a long time and I shop there. I think it's a good store. I just have a hard time seeing how a discount retailer can really be worth as much as they are. But frankly, I am humbled by their performance. For a long time, this has just been a stock that many good investors, including Charlie Munger, the great late Charlie Munger, was an investor and a believer in Costco. I think the membership program really makes them a little different and sets them apart out there in the retail world. So let's take a closer look at Costco. When we look at Costco, there hasn't been any big pullbacks in the stock. The last one was in 2022. That's when a lot of stocks were really going down in value. Back then, you could have seen a nice pullback in the stock, but in that year, a lot of stocks were pulling back, especially the tech stocks went down a lot. And since then, the stocks really worked. So overall, I think investors in Costco have been very happy. I appreciate you watching this video and I hope you find it interesting. Let me ask for your consideration to become a paid member of this community. It costs $10 and I'd really appreciate it. You'd get benefits like access to some of the tools that I use when I do the analysis, invitations to a member video conference call each week, and you would be put in the priority of suggesting stocks to review on my live streams. Those are benefits that you'll get as a $10 member, and that membership will go up in price after the first week in October. Thanks for your consideration. You can find a link to the page you're seeing on the description of this video, so you can go and get more information on it. Costco is a big cap stock, and for a retailer, they're up there in valuation with Walmart. They're just a really valuable company. They have revenue of $254 billion per year. They are profitable. And their PE is really high at 54. And next year, it's going to be at 50. They pay a small dividend, and analysts say it's a buy, but it is priced a little expensive, according to analysts. When we look at their financials, they have had steady growth. They saw a spike during COVID when people were really locked down and they needed to get a giant bundle of toilet paper, if you remember those days. The latest quarter, the company only grew by 1%, which is pretty anemic. And I think a concern for some investors, what's going on with Costco's growth. As we see inflation really come down, I think that prices will not increase as much. So Costco will not see their revenues grow as quickly due to inflation. That might be what's going on with their revenue. Their balance sheet's excellent. I think they have more cash than they do debt. So that makes their balance sheet very, very high quality. When we look at their cash flow, they have positive cash flow and they've grown it over time. But it's just not a lot of cash flow. And I'm looking at the quarterly, so let me switch that over to annual. And when we look at free cash flow, it has gone up over time, but it's 6.6 billion. It's underwhelming because it's such a big cap stock. You would think they're making a lot more free cash, but that's the number I'll use in my valuation model that uses free cash flow to value a company based on discounted free cash flows. When we look at the forecast for the company, a lot of analysts cover the stock. And some analysts are quite pessimistic about the stock. Most analysts say it's a little overpriced. And one analyst thinks it's still got room to run to the upside. And they're using the best forecast Costco has. And that's this year, they're going to do $16.67 per share, $18 next year. So that's a pretty good growth of about 8% in 2025. It still sets up the P to be quite high. Again, this is a retailer of discounted goods. And they do have a membership program. One thing that I see as a competitive situation is Amazon just keeps getting bigger and bigger and more powerful. And I think that might continue to be a headwind for Costco. Costco certainly is a place to get value, but you can also find a lot of value on Amazon. I took Costco's information and put it into my valuation model. And I look at cash flows, discount the cash flows I expect in the future from Costco to get to a value of those cash flows in today's net present value. And looking at their cash flows, I took that trailing 12 months we looked at in their financials as a starting point in year one. And I'm going to grow the first 4 years by 7%. And then all cash flows beyond year four will grow at 4%. I'm going to use a nice low weighted average cost of capital discount rate to discount those free cash flows, since it does have a very high quality balance sheet and it's a very well-known company that's operated very, very well. The intrinsic value of all those cash flows is $192.5 billion. I'll add the cash on the balance sheet and take away debt to get to an equity value of $195.4 billion. The market cap of the company is $399 billion. So it is overpriced. It's priced too high with a 51% premium based on the cash flows. Earnings per share is a similar situation. I look at the earnings per share. Right now, they're at a 50 PE, and I just cannot give a retailer a 50 PE. I know a lot of people appreciate the company, but best I can do is 25. It's my capital. It's my decision. And the growth rate is 8%. And when I use a lower PE, I only get $450 of value out of that earnings per share. So it's about 50% price too high. So combined, it's being sold at a 51% premium. That's one of the reasons why I've never been able to really warm up to Costco is their fundamentals don't quite impress me. There's thousands of stocks we can pick from. I can pick stocks with a similar market cap that do far better. And at the end of the day, we're buying businesses that are going to produce value for the shareholders. That value I measure by looking at free cash flows and earnings per share. Costco is a desirable business, but it's not a perfect business in my eyes. I think that they have a lot of competitive advantages. More certainly their brand. Their brand's really, really trusted. People really get a lot of value from going to their stores. But they have competitors that are really strong. Walmart, very strong. Target, very strong. You have Amazon, that is a powerful company. And as they operate against those competitors, I think there may come a time when those competitors do something that's really good, maybe take away some market share away from Costco. Maybe people get tired of paying that membership fee. I oftentimes question, do we really buy enough stuff at Costco to pay that membership fee? We always end up renewing, but I'm willing to bet someday we might cut it off. Who knows? We'll see. So overall, it's a nice, attractive business. It's desirable to me, but it's not a perfect business. So I put them mostly in the green and partially in the gray because they do have some really tough competitors. Overall, with a premium on the stock of 51%, I'm going to pass on Costco. I wish all Costco stockholders the best of success with the stock. It'll likely probably keep going up, but it's just not an investment where I completely believe in the fundamentals. And I'd rather stick to my process, which has been really successful year after year. So that's my video on Costco. I really appreciate you watching. Good luck investing in 2024.